Hello, everybody. I am recording today's summary, even though we're not having a show tomorrow on Friday, and I'm not going to be able to do the summary either. Here we are on Thursday night. I just wanted to do the summary for what was happening this week. I thought there was enough important things that happened to discuss and to, push out into the video here so people can kind of understand. So, of course, the big thing that happened this week was that the Federal Reserve was meeting and then ended up cutting rates. And so, the rate cut was no surprise whatsoever. Market had a 97% bet that, there'd be at least a quarter point rate cut. There was a small bet that there'd be a half a point rate cut. The market was down a little bit after the announcement. I think probably because there was some expectation that the half a point might actually happen. And maybe it was priced in just a little bit. And so I think what happened behind the scenes, though, is more interesting and maybe more instructive for what might be happening going forward. So the Federal Reserve is concerned about inflation. Chairman Powell talked about, the economy still showing signs of inflation. They're hoping that the tariff inflation is a one-time event, but obviously there's potential for it to be something that, catapults into a more serious inflationary environment. And so, cutting rates when you have a gross domestic product that is still growing, which means the economy is growing and such, and inflation is going up, it hasn't happened very often. Let's put it that way. So, what you're having here really is a situation that the labor market is starting to, soften quite a bit, and they have a dual mandate, fight inflation, help labor. They've got to decide here which way to go. And so, at least at the moment, they've decided to do this quarter point rate cut. So, but if you look at the vote for the cut, it was 11-1. So the Fed governors voted altogether 11 for one quarter rate cut and one person for the half point rate cut. So what's significant about that is the one person was just assigned to the Federal Reserve Board by President Trump and confirmed by the Senate. His name is Stephen Moran, and he's the one that voted for the half a point. So this is where you start to worry about the independence of the Fed, because you've got 11 people that thought a quarter point was a good idea, and only one person who maybe is looking at this more from a political standpoint than from an economic standpoint was voting for a half a point rate cut. And they put out a situation called the dot plot once a quarter. And so it's actually part of the statement of economic projections. And they talk about all kinds of things that they see, but the dot plot is pretty well, known. And what it is all the Fed governors, even the ones that don't vote, so there's a total of 19 of them, get to put down, what they think interest rates are going to be in the future. And basically what you've got is a really bifurcated dot plot this time. You have some board members who believe that rate cuts shouldn't happen at all. We should have rate increases. And we have some people, especially what looks like to Steve Moran, expecting, very big rate decreases throughout the rest of this year and next year for that matter. So what you look at is that across that dot plot, the average, vote, so to speak, was for a quarter point rate cut at the October meeting and a quarter point at the December meeting. But it's very close. Matter of fact, you had, 9 people who felt that the rates should be, either only one quarter this year, not two cuts, and or zero, or even up as far as that goes. And then you had another 10 who said that, they should be at least one quarter point cut. And that Steve Moran was really the one that kind of tipped the scales to that. So there's no real big guarantees that we're going to see rate cuts coming up here, just because the Fed is pretty bifurcated. I think we're going to be pretty data dependent to see what happens as far as that goes. But it's a good environment for the stock market. At the moment, you've got this delay of the things that are kind of negative. So, the tariffs and deportations, the attacks on the independence of the Federal Reserve, these are really big deals. Kind of combine that with the fact that the market is very expensive, possibly the most expensive market in the history of, the stock market. So kind of price for perfection, and these negative things just really haven't had an impact yet. And the positive things have. Earnings are doing well. Gross domestic product is growing. NVIDIA investing $5 billion in Intel to start getting manufacturing, of semiconductors, more likely, I suppose, here in the US, which is something we really need. So you saw tech companies do quite well. Tech companies love when interest rate starts to come down. So it's not a bad environment at all. The market could do quite well here. I think the issue will be, is it good enough to offset the impacts of these other negative things that are coming, at some point in time? Might not come at all. Who knows what happens as far as that goes? But we're starting to see impacts from them already. Just maybe not the full impact as far as that goes. So anyway, that's kind of what was happening this week. I think the Federal Reserve piece was very interesting. The bifurcation on the board is different than it's been before. The fact that the board is going to be kind of taken over slowly but surely. They're going to replace some of these board members. And then, of course, they get to change the chairman of the board. Chairman Powell is there now, but he will be out in May. Probably announce somebody by the end of the year who's going to be taking that spot. But so that, will be very interesting to see what happens. We don't know that what they're talking about is wrong. Maybe it is okay to do a half a point rate cut, or even do 2 or 3 points of 2 or 3% of rate cuts here, over the next 12 months and really get things going. However, chances are that that's going to be looked at as partly political. The bond market could have a hard time with that. So, there's some pieces here that I think are going to be interesting to see how they play out. And again, it doesn't mean that they won't be great, but there is some risk there as far as that goes. So we'll just have to keep watching and kind of react and see how the market's reacting. So far, the market seems to like what's happening. So we'll go with that. So anyway, that's the summary for this week. Look forward to being able to do the summary next week. We should have the show on Friday. We'll do it at the beginning of the show. So again, thank you very much. Thursday night doing the summary. So there may be something that happened on Friday, that I'm not aware of, obviously, at this point in time. But nonetheless, what we were thinking about so far. So look forward to talking to you again next week. Thank you.